Good morning and welcome to the Killik & Co market update. One of the main focuses of this week has been results from Nvidia. Nvidia is a key enabler of artificial intelligence, so there was lots of anticipation about these results. In the end, the company posted above expectations results with sales at a record high, and also the company announced a $25 billion share buyback, which investors were very happy about. Enthusiasm over these results contributed to a strong market performance on Wednesday when they came out. However, later in the week, markets weakened a bit as investors looked ahead to the Jackson Hole Economic Symposium. Jackson Hole is an annual conference of central bankers, with a speech from Jerome Powell, the chairman of the Federal Reserve, and investors will be closely listening to this, hoping for some clues as to the future direction of US interest rates. Here's a chart showing the yield on 10-year US government bonds and how this has changed over the last 20 years. The yield has picked up recently to a 16-year high, suggesting an expectation that US rates will remain higher for longer. This week has been a big one for moon landings. On Sunday, Russia failed to land a spacecraft on the south pole of the moon, and on Wednesday, India successfully completed that same mission. India is already a market of interest to investors because of its young population, and this example of the improvement in the country's technological capability is likely to attract more attention. The MSCI India index has been relatively resilient in recent years. Here's the chart. It's gained about 60% since 2018. What's particularly interesting is the divergence between the MSCI India and the MSCI China indices. Here's a 10-year comparison. They've tracked each other fairly closely until 2021, but they've followed very different paths since then. This week, the UK government has delayed the imposition of post-Brexit border controls on fresh foods coming in from the EU for the 5th time. These were supposed to begin in 2021, and now they're unlikely to be introduced until 2024. The reason for the delay is apparently concern about the controls further pushing up food prices at a time when food price inflation is a real concern. Here's UK food inflation over the last 10 years. We actually had a period of deflation in late 2020 to early 2021, but food inflation rose rapidly into 2022 and hit a peak of 19.3% in April this year, before declining to 14.9% in July. Ministers are clearly keen to keep this food inflation on this downward path. Also on the subject of food price inflation, India has announced an export ban on sugar after a period of bad weather impacted supplies. Sugar prices have come up a lot in recent years, and you can see it doubled between 2018 and 2023. With this in mind, it's not surprising that UK ministers are avoiding actions that could further stoke food price inflation. Next week, it's looking fairly quiet on the corporate calendar. We're expecting results out from Prudential and Salesforce. That's it from us. Enjoy the weekend, and we'll see you next week.